Hitesh Zaveri is joining us now from Access Asset Management. Hitesh, what are your thoughts on the quality of earnings which have been coming out so far? Do you see a mixed patch? Are you seeing traces of some slowdown? Then we'll talk about sectors in particular, but up till now, the numbers and commentary.
Hey, Jay, good to be with you. Well, the earnings so far is actually in line with expectations. So thankfully, there have been no negative surprises. On the banking side, the numbers have been good. As you pointed out earlier, the commentary has been good, and we think that the outlook for the banking industry will also be pretty healthy for the remainder of the year. And also on the FMC side, the consumer staple side, the management have mentioned that the retail demand is now picking up. Rural demand especially is looking, more optimistic than before. For the rest of the sectors, earning again is in line with expectation, in some cases slightly better. And the main factor there is, the inflation is coming down. And as inflation trends down, it kind of, really helps companies to deliver a decent earning.
Hitesh, talk to us about what your thoughts are on, the slowdown which we are talking. Everybody's talking about. This slowdown, to certain extent, will surely be felt by corporate India. Have the numbers been done on the lower side, or the street is still not taking that account and factoring in whatever extent? It may be small or it be large slowdown, but then it may vary, right? The extent may vary. But is that being penciled in or not yet?
I think it is penciled in. First of all, I don't think the expectations for the earning forecast for 24 are overly optimistic at all. So, of course, the one source of the slowdown is the expected, the global recession, if you will. The World Bank MD did say a few days ago that about one third of the countries in the world are going to be entering a recession. So, and India cannot be in isolation about that. So, we are going to have some effect. India, of course, thankfully has been having very strong domestic market. Our domestic demand is good. I'm yet to hear from any companies so far saying that the slowdown is worrisome and it's kind of aggressive. Plus, I also think that the coming budget will overall have a positive commentary. First of all, India as a country has been having strong growth versus many others. We were the second largest last year in G20 in terms of the GDP growth, and we will be one of the will be in top two in G20 in terms of GDP growth. So I'm not too much worried. If at all the market valuation they were not to rise, it will be on account of the fact that Indian valuations are rich and that the India China trade, about which we have talked enough, which is to say that as China revives and opens up incrementally, a lot of money will be going there, and many of the funds will want to reduce their India exposure a bit. Other than that, on the economic front, I'm not worried about a slowdown.
Hitesh, you said that banking sector is actually seeing very high growth. Credit growth is okay. Asset quality also has the improvement trend continues. But what are your thoughts on the deposit growth? Because there are some names where deposit growth is under 15%. There are names which deposit growth is closer to 20. So do you see where there is slow deposit growth, those guys feeling NIM pressure going forward? Or there is risk of that sort on the table?
Yes, that's a great question actually. So, and this was bound to happen, right? So what has happened is that there has been a strong loan growth that the banks have been banks have been kind of reporting for almost 3 quarters now, especially the last 2 quarters. And the incremental loan to deposit ratio has been kind of rising substantially. So this was bound to happen. I wouldn't worry too much about it in the sense that this is not going to constrain substantially the loan growth that the system has, and that the forecast have captured. Surely the cost of deposits are going up, and that in turn will have to get transmitted. And we are already seeing that for example, the housing loans numbers are already up by 1.5%, and that at the margin is beginning to affect some amount of housing loan growth numbers there. And I think it will happen a bit more in some of the other sectors. This is a part of a challenge that banking industry will have. But I do think that there are mechanisms for them to through their better credit quality, better underwriting, better cost management, that they'll be able to mitigate.
Hitesh, if the hypothesis that in the next 6 months, 6 to 10 months, uh, inflation actually heads lower, does materialize, then the margin pressure for corporate India, especially the mid and small ones,
I'm sorry, Ajay, your
actually,
voice is not reaching me.
yeah. So I was talking about inflation. If inflation indeed comes down over the next 6 to 10 months, do you see margin pressures of corporate India to ease out, especially the small and the mid cap, which were facing massive pressures?
I apologize. I not was not reaching at my end.
Okay, okay, I'll try and reconnect with you in a moment, but let's hear out some of the other market voices which we have gathered through the day.
Always been very excited to look at IPOs. We think IPOs can deliver massive value, uh, provided they've bought at reasonable multiples and the growth is intact. Uh, you know, we even in the past, many times IPOs are not well understood when they list, and over time, people understand them, and allocations and money flow do start coming in. So, what we've learned is that the first few years after a company's IPOing are probably one of the best times for their stock prices and businesses, even for their businesses' growth. So, and each of these companies are on in different sectors, but we feel that the growth would be pretty solid, run by good promoters, good management, and we generally are always in the lookout for good IPOs.
All right, let's take a short break on that note, come back with more stock specific analysis. Don't go anywhere.